Joining us now is David Bianco, Chief Investment Officer for the Americas at DWS Group. Continue the headline in the way you feel, David. You continue to be cautious about equities. So what does that mean? Should we sell right here because you're cautious and we think we're headed back down and maybe buy at lower levels? Is that what you would recommend right now?
Joe, good morning. I would recommend being underweight equities. We are instead preferring to be overweight corporate credit and municipal bonds. We think that is a better reward for the risks. We are underweight equities, and our preference is for large cap U.S. equities and a continued sticking with growth stocks. Where I think the most vulnerable part of the equity market remains, and I don't think there's value there, it is value stocks. It is, at this stage, financials, but still energy too, industrials, even things that in the past were defensive have more risks than before, like REITs. So I know we may all be sick and tired of watching a certain group of stocks just keep leading the market, but I think that leadership is well-deserved. Technology, healthcare, and then sticking with some of the defensive things like consumer staples and utilities are my preferred defensive. So stick with leadership, but I think the leadership in terms of all asset classes for the next few years is going to be corporate credit and municipal bonds.
So market's probably up 30% from the lows, and there's a lot of companies that you probably, some of the great companies, great stocks, that you could have gotten 30, 40% lower.
That's right.
So at that time, you were less cautious. At that point, you must have said, wow, I haven't seen some of these stocks at levels like this in a long time. Did you make any buys, any purchases, any recommendations down when we were down 30% lower?
Of course we did. We used some of the opportunity to buy some of the stronger and growthier names that we've liked for a long time. Some same positions, but increase some of those positions.
You're still underweight down there, or you went?
Yes.
Still underweight, though.
I was underweight equities at the lows. I remain at the same levels of underweight equities. We did make attractive returns in corporate credit, as I said, and I think we've got more to be had.
What about this time?
I would point out that we stuck the entire time with the growth stocks that we've been, and that's done well for us within our equity accounts.
A lot of people think we could retest the lows. That's why they're cautious. Maybe that's why you're cautious. So let's say we go back down and test the lows.
Yeah.
What would you do this time? Would you get out of your underweight position this time in hindsight, or would you still not buy down and stay underweight down at the lows again? I'm just wondering whether you'd buy that dip or whether you'd not buy it again. What would you do?
There's a better chance I would buy the dip. If we went to 2,500 or lower on the S&P 500, we'd probably be more open to going to a more neutral position on equities. And that would be because there's more time that has gone by. We've been able to monitor the policy responses to this crisis. But this crisis and this recession is still very much it's still playing out. The economic damage has been tremendous. Probably the vast majority of it's behind, but we're still learning about the real damage to corporate earnings power and balance sheets.
Right, but we're definitely seeing all that. That's why there is so much uncertainty. We hear it every day from most people. So let's say that the market continues to confound a lot of people and goes up another 10, 12% and almost gets close. At that point, would you sell that rally and lighten up? Would you do it at that point, or I would
sell this rally.
You would sell this rally?
I would sell this rally.
Okay, so you're selling this rally right now. Okay.
Yeah, we are. I think this is an opportunity to lighten up on risk, find the opportunities in the other asset classes that are still there. I do think this market has taken a giant leap of faith. And when it comes to these tech stocks, which that's where I'm most enthusiastic, there's still a lot of blue sky in the valuation. So if you're going to buy blue sky, make sure it's the most crystal clear of blue, and that's why we're sticking with the proven growth stocks that you will find. Your other guests have talked about, and we find no reason to rotate away from that toward the value stocks at this time.